Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 15th, 2025, and we're diving into So-Young's second quarter earnings report. So-Young is a leading aesthetic treatment platform in China, connecting consumers with both online services and offline treatments. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss So-Young's latest financial results and what they mean for the company's future.
Revenue and profitability overview. Let's start with the top line. So-Young reported total revenues of $52.9 million for Q2 2025, which is a 7% decrease compared to the same period last year. John, can you walk us through these numbers?
Absolutely. The decline in total revenue is primarily due to a decrease in the number of medical service providers subscribing to So-Young's platform. However, it's important to note that the aesthetic treatment services revenue saw a significant increase of 426.1% year over year, reaching $20.2 million. This growth is largely driven by the expansion of their branded aesthetic centers.
Despite the revenue growth in aesthetic treatments, the company reported a net loss of $50 million. What factors contributed to this loss?
The net loss can be attributed to increased costs associated with the expansion of their aesthetic centers and a decrease in revenues from other segments like information and reservation services. Additionally, operating expenses remained high, which impacted profitability.
Operational efficiencies and future outlook. Moving on to operations, So-Young has made significant strides in expanding its user base and treatment visits. John, what are the key operational highlights from this quarter?
So-Young has indeed made impressive progress. The number of active users exceeded 100,400, and verified treatment visits reached over 67,400, a substantial increase from last year. Additionally, 25 out of their 29 aesthetic centers have achieved positive monthly operating cash flow, which is a strong indicator of operational efficiency.
Looking ahead, what can we expect from So-Young in terms of growth and expansion?
The company is focused on scaling its network of aesthetic centers, with a target of operating 50 centers by the end of the year. This expansion is expected to drive long-term growth and consolidate their market-leading position in China's aesthetic treatment industry.
CEO and CFO insights. Let's discuss the insights from So-Young's leadership. CEO Xing Jin mentioned that the branded aesthetic centers became the largest contributor to revenue for the first time. What does this signify for the company?
This is a significant milestone for So-Young, highlighting the success of their transformation strategy. The CEO emphasized the strength of their vertically integrated approach and the focus on standardized aesthetic services, which have increased customer trust and loyalty.
And what about the CFO's perspective?
CFO Huai Zhao pointed out the improvements in both the scale and quality of their aesthetic centers. The company is investing in long-term sustainable growth, aiming to operate 50 centers by year-end, which will further solidify their market position.
Key takeaways. In summary, So-Young's Q2 2025 results reflect both challenges and opportunities. While the company faced a decline in total revenue and reported a net loss, the growth in aesthetic treatment services and operational efficiencies are promising. With plans to expand their center network, So-Young is well positioned for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing So-Young's performance and prospects.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial insights. We'd love to hear your thoughts on So-Young's performance in the comments below. Until next time.